Ladies and gentlemen, we have massive news to go over with you today that actually has futures open right now up over 1% on the S&P. Like, this is big news. Now, we'll see what comes out of it, but so far, so good. Now, if you guys do not know, I'm sure you do by now, markets are not open today. Okay? Happy Memorial Day weekend and Memorial Day. But we will be open for trading coming tomorrow. So here in this video, I will share with you all of the news that markets are reacting to today and how this could affect the week ahead. We will, as always, go over your Tesla stock breaking news as well. Ladies and gentlemen, let's get started. So first and foremost, Donald Trump last week called for a 50% tariff on EU goods to begin on June 1st, but has since delayed the rollout of the duties to July 9th. European stocks rebounded Monday morning, moving into positive territory after previously sinking on Friday in response to Trump's fresh tariff threats. Okay, so you got a bit of a delay here. This is kind of like Trump kind of used the China tariffs as credibility for everybody else. Like, when Trump says something outrageous, like, he might just actually do it. So it's getting countries to actually act, okay? And that's why Wall Street does take what Trump says as, at least to some degree, on face value. And that is why stocks sold off in the second part of last week. Well, as of right now, futures are actually up for tomorrow, about 1% for the Dow, 1.2% for the S&P, and Nasdaq's up about 1.5%. Okay, bond futures are not open at the time of recording this video, but so far so good. The Stock 600 is up about 1%. The DAX is up 1.5%. FTSE down about. FTSE doesn't look like that's actually open today, but the European markets, generally speaking, also doing pretty good. That's a sign that we're going to have a good day tomorrow. But again, you do have to ultimately see some follow through from this. You need to see negotiations start to go the right way, or talks even start. Clearly, with the delay, there was obviously some kind of progress, and I think that is really what the markets are reacting to the most. Now, as I've said before here on this channel, I think a 20% rally into year end is coming. I know that sounds crazy, but the tails are always fatter than you think, okay? If that doesn't make sense to you, it's a bell curve, okay? The tails are the extreme outcomes. They're always fatter, or aka more likely than people think. That means a huge crash is actually more likely than most people think. A massive rally is more likely than most people think on any given year. Okay, if you assign a 1% probability to something, it's probably more like a 3% probability. If you assign a 10% probability, it's more like 15 or 18%. Okay. That's what that means. And that's why you have to be prepared for tail risk events on both sides. Positive tail risk events and negative tail risk events. In fact, tail risk events are really the biggest movers of markets, because markets are largely based on expectations. So when you get something that is not expected, positive or negative, that's what moves markets the most. I know it gets deep. The psychology of markets is actually pretty insane. And I've spent a lot of time over the last 10 years studying that. And I, again, like to share that with you, bits and pieces here on the channel. But I do think a 20% rally is coming. I think at the end of the day, 6 months from now, we're going to be in a situation where we have trade deals. Trade war is over. Okay. China, Europe, Middle East, Japan, South Pacific, China region, Vietnam, Taiwan, blah, blah, blah. All of that's over with, okay? We're going to be in a situation where maybe we have more open trade with other countries. I think that could be a positive factor for corporate earnings, Okay, we're going to be in a situation where hopefully the tax bill gets passed. Okay, there was some bad news over this weekend that some GOP senators, Republican senators, are holding out on this tax bill, that they don't want to see this tax bill go through, and there may be enough of them to not get it to go through. No tax on overtime, no tax on tips. If that goes through, could be a big driving factor for the consumer to help pull the consumer out of a recession. I'm optimistic the tax bill gets done and we ultimately see, more consumer spending behaviors. Now, beyond that, Elon Musk and many other prominent investors and entrepreneurs in this country have made it clear the deficit's going to be the deficit. We're not going to fix that at this point. If Doge couldn't fix it, if a Republican presidency couldn't help at all, the only way we get out of this crisis is with extreme economic growth. The White House believes 4.5% to 5% growth is achievable over the next, couple of years. That would definitely do a lot to fix the fiscal situation that this country is facing. Okay? If we get that in a situation where we have open trade, where we don't see inflation, because again, even the Fed doesn't understand this. Inflation is a money printing phenomena. We're not doing that right now, even though you could say deficits are kind of like that, but it's different than like giving out stimulus checks. We see inflation these days when we give out stimulus checks, when we give out like money to people, okay, and mix that with supply chains, so on and so forth. So I don't think we're going to have inflation. We're going to be really focusing on AI innovation and the future 6 months from now. We're going to have rate cuts. Again, trade war is going to be over. There's not a lot to dislike, in fact, about this market over the next 6 months. And really, Wall Street's underpositioned. So I think over the next couple of months, Wall Street's going to have to get a lot more exposed to the upside in this market as more of these things become obvious, okay? I believe I will be correct on this. I'm not a fortune teller. I do not have a crystal ball. I could be wrong. But at the end of the day, I think I'm just really, really early to this, okay? And by the time Wall Street's talking about this, the market's probably up another 10%. From here, probably at like 640 on the SPY. I would say probably by July we'll be there. Maybe, August-ish, somewhere around there. And then everyone's going to be talking about the things that I'm talking about here in this video. You just have a big heads up of this and do what you will with that information. Do not blindly listen to me or believe me, but at least try to keep an open mind towards these things. I think the S&P closes this year at 700. That's a 20% rally, or it was a 20% rally. 700 on the SPY would be almost a 21% rally from here. Sounds crazy, I know. But I think 700 this year is obtainable. And I think 800 plus next year is attainable as well on the headline SPY if we do see that 4+% GDP growth. I mean, imagine all of these things we're talking about with rate cuts and inflation's finally gone. Consumer can start to recover, free and open trade, more of it with other nations, okay? A focus on AI innovation and advancements as a society. I mean, why would you bet against that? Like the bears right now, I think are like, I don't want to say it like this, but smoking rocks. Like that's crazy. That like, where's the bear case? I just don't see it unless we have a dramatic weakening in the labor market, which companies are not firing people. They're not. That's not the first thing they're doing. Tariffs are not large enough to force that at this point. I think ultimately China falls to a 10% tariff, which is fine. Like if you're Walmart, do you really want to raise prices on everybody, get Trump on your bad side and have 50% of the population start to boycott you? Probably not. Okay. So seems obvious to me. Again, I could be wrong. Also being reported, the U.S. demanded South Korea resolve trade imbalances in recent talks. The German economy minister says we must calm down and keep talking in tariffs now. And the German foreign minister will travel to the U.S. on May 27th to meet his counterpart, according to the ministry's spokesperson. China's finance ministry on Moody reaffirming China's rating says, quote, "It is a positive reflection of the Chinese economy's upward trend." They also say China's incremental and existing policies will provide firm support for the economic development. Now, EU spokesperson declines to give details of a discussion between von der Leyen and Trump on Sunday. But the EU spokesperson says the call between von der Leyen and Trump has given new impetus to trade talks. The EU's 0 for 0 proposal is still on the table in talks with the US, according to the EU spokesperson. That means 0 tariffs from us, 0 tariffs from you. The German chancellor, though, says we need to prepare for any failure of EU trade talks with the US, as well as for any other scenario. Donald Trump says, following this conversation with some of the EU trade representatives, he says that countries from all over the world want to make trade deals with us. It is a beautiful thing to see. The good old USA will soon have tremendous growth and be stronger than ever before. Now, also this week, we have a bunch of big earnings, like a bunch of them, okay? Monday, you have Joy. It says in after hours. Today's Monday. Markets are closed. Tomorrow morning, AutoZone, Scotiabank, some others. Tomorrow in after hours, you have Okta and Box. Wednesday pre-market, Dick's Sporting Goods, Abercrombie and Fitch, Macy's, and BMO. Wednesday in after hours, get this, NVIDIA. Good old NVIDIA still is not reported. They come out on Wednesday. Salesforce, C3 AI, Elf, Nutanix, Agilent Technologies, Viva, Centennial One, Pure Storage, and Synopsys. Thursday pre-market, you have Foot Locker, Best Buy, Kohl's, Hormel Foods, Futu, Burlington, and Build-A-Bear Workshop. Thursday, you have Marvell, Costco, Dell, Elastic, Zscaler, Ulta, Gap, American Eagle, NetApp, and Ambarella. So this is actually a big AI week, a big data center week, a big really software week, specifically with AI, okay? NVIDIA is always a big catalyst for markets. I think this time around, though, like we've gotten a lot of earnings out the way already. We've had a lot of companies like XAI, literally building the largest supercomputer in the world, reaffirming they're going to buy hundreds of thousands of chips from NVIDIA. Oracle also came out saying they're going to buy $40 billion of chips from Oracle. We've had all of your mega cap tech names reiterate their AI CapEx guidance. I don't think there's going to be a huge surpriser here. And if anything, it could just further reiterate like, hey, NVIDIA's here. They're doing good. Like there's not much to see. I don't expect a bad number. I don't expect a super good number either. Like, are we going to get a blowout? Well, NVIDIA they always blow out, but is it going to be like a $5-10 billion blowout? Probably not. But I think it's enough to move markets higher, okay? Especially with the commentary that NVIDIA provides. And again, they're going to say, hey, things are going great. As far as economic data coming out tomorrow, you have durable goods orders month over month. Now, here's the deal. What Wall Street wants to see right now, and what I think you need to see to get markets to go higher, is good economic data. So durable goods orders month over month will come out tomorrow morning at 8:30 in the morning. You're expecting a negative 7.9% number. That sounds scary, but last month was positive 7.5%. So anything that is less negative than 7.5% is actually positive from a month over month perspective. Okay, like if you come in at negative 6%, okay, that's actually really good because then you're still positive 1.5%. Okay, so that's how you kind of got to look at that, even though the numbers kind of look crazy. CB consumer confidence will also come out at 10 o'clock in the morning, and the Dallas Fed Manufacturing Index at 10:30 in the morning. A speech from Fed Williams at 8 p.m. On Thursday, you have the FOMC minutes. Doesn't tend to move markets all too much. That is at 2 p.m. It's backwards looking, so keep that in mind. Even though it does come up red here on the economic calendar, doesn't tend to move the markets much. Richmond Fed Manufacturing Index for May, manufacturing shipments and services revenues will be coming out. And then Dallas Fed Services Index will also be coming out. at about 10:30 in the morning on Wednesday. On Thursday, GDP growth rate quarter over quarter, second estimate for Q1, you're expecting a negative 0.3% number. So expecting that Q1 GDP print to continue to come in negative, which again, it's going to be negative for the final numbers. That's priced in, doesn't matter at this point. But if it does get revised up and it's not as negative, that would definitely be good. Initial jobless claims expecting about 230,000. That tends to be a catalyst every week. If it moves, if it spikes, or if it falls a lot, then you tend to get a reaction in markets, but not if it comes in line with expectations. On Friday, let's see, we are going to get core PCE month over month, expecting only positive 0.1%, so virtually no inflation. Personal income month over month expected at 0.3%. That would actually be a really good number. That's more in line with 2% inflation. Personal spending month over month expected at 0.2%. And honestly, you want that as high as possible, right? People spending money is a sign of, how good or bad the economy is doing. Wholesale inventory, Chicago PMIs, Michigan consumer sentiment, final numbers for May, all kinds of different things are going to be coming out on Friday. And really throughout the week, there's going to be smaller data sets, bond auctions here and there. Lately, bond auctions have actually been pretty important, and was one of the factors that was driving up 10-year Treasury yields, because investors were just not buying the bonds at the auctions. And that's why 10 years hit almost 4.6%. You're back down to 4.5% if we do get good inflation numbers this week. With PCE, if we do get, good economic data, I wouldn't be surprised if 10-year yields do fall below 4.5%. And I think that gives you a bit of a boost in markets, just from an algorithmic perspective. As I've said before here on this channel, above 4.5% is kind of a pain level on the 10-year from the algorithms that do like 80% of the trading volume, right? Most trades are not done by people clicking, hey, I want to buy this or I want to sell this. It's mostly done by computers. And above 4.5%, it does seem like there is more sell orders on stocks broadly, versus if it falls below 4.5%, that could actually trigger some buying in markets. But again, we'll have to see. The news today for Tesla. Tesla's new Megapack factory in Texas is really coming along. At max production output, this factory will be capable of generating up to $10 billion of revenue per year. So this will make the third Megapack factory, something that, again, nobody has paid attention to from hedge funds and institutions this year. Like, nobody has cared at all about this new Megapack factory. Elon Musk also confirms that unsupervised FSD will begin in Austin, Texas in June. So again, another reiteration of that. The last thing you need is some kind of delay or issue or something like that, but it doesn't look like they're coming across any of those. Now, it's also being reported that some Tesla stores around the US are seeing a record amount of test drive signups since yesterday, specifically with the 48-hour option. Some locations are booked out for the next 4 weeks with certain models. There has been 10,530 clicks on the sign-up link below that even Sawyer Merritt himself posted, let alone like other people that aren't on X that are going out and doing test drive. Also, for anyone that cares, confirmed by Elon, X is launching X Money soon. Elon says this will be a very limited access beta at first. When people's savings are involved, extreme care must be taken. Now, I think broadly speaking for Tesla, we don't have like Robinhood, overnight trading open just yet. But I do think Tesla stock, again, I've been saying this for a while, is coiling right here, right below 350. When you break above 350, you're going to see a rally into the 400s. That's my view. I think it's going to be pretty aggressive. And I do think, the indicated or implied open for tomorrow probably implies that Tesla's going to be up 4 or 5% or so. And again, NVIDIA earnings, I think, are going to be a positive catalyst for markets. I'm not expecting anything outrageous in the economic data that's negative. If anything, that should be a positive. Those should be positive catalysts as well. I do think this week is probably going to be a pretty good week for Tesla. Is it going to be the week you break above 350 and make a run to 400? It very well could be. I guess we'll just have to see, and well, time will tell. Ladies and gentlemen, that is going to do it for this video. Let me know your thoughts on this down below in the comment section. I will also point out that above 350, I think, is where you start to get a bit squeezy, where you start to see hedge funds and institutions get pretty nervous, start covering on short positions. And yeah, that's where I think you get the explosive move into the 400s, right? And you've also seen a lot of pushback around 350. The larger the consolidation, the larger the breakout tends to be, right? Because there tends to be more accumulation around these big, important levels. And again, we have big catalysts upcoming for Tesla. Like, do you really want to be short Tesla right now? Probably not. There's about 3% short interest of the float, totaling about 81, almost 82 million shares sold short. Yeah, I wouldn't want to be a part of that group. And I do think at the next sign of a major break above 350, you're going to have a lot of people getting out of the stock, while also seeing a lot of people chasing the stock as well. Because above 350, I think the odds of making your way back to that previous all-time high in the high 400s, like 480, 490, becomes more likely. And at that point, just taking a long position at 350 to play for new all-time highs would still be upside of 40%. Hedge funds and institutions, I think, would love to take a 40% rally in Tesla and ride the momentum to the upside. So let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.